What's up, guys? I'm Jimmy V, and if you're buying a house right now, somebody has probably asked you this question: conventional or FHA? And you've probably gotten like 5 different answers from 5 different people. So today we're settling it. Good to go. Mortgages made simple, conventional versus FHA, head to head. And by the end of this video, you'll know which loan makes most sense for your situation. Because here's the truth, neither one is automatically better. One of them may be better for you. Questions, be sure to comment down below and I'll get them answered. Let's get after it. Round 1, all right, the down payment. Everybody assumes FHA wins this round because FHA allows a minimum down payment of 3.5%. But did you know that certain conventional loan programs may allow qualifying buyers to put down as little as like 3%? It's a surprise, right? So based on down payment alone, this is basically, in my opinion, a wash. The difference between 3% and 3.5% may not be enough to make the decision for you. Good to go. The fight is not decided in round 1. So let's keep watching. Round 2, your credit, right? This is where FHA starts to kind of flex a little bit, all right? FHA was designed to offer a more forgiving path for buyers whose credit may have taken a few hits or lumps, right? So generally speaking, FHA can be more accommodating when it comes to lower credit scores, past collections, and certain previous credit challenges. Whereas conventional financing is much more heavily driven by like your overall credit profile. Strong credit may be rewarded with better pricing on conventional loans, a better interest rate, and a less expensive mortgage insurance. But if your credit is a little bruised, right, conventional pricing can become considerably more expensive. So, rough rule of thumb, strong credit generally leans conventional, bruised credit or lower credit may lean FHA, but we're still not done. And really quick, right? If you want to reserve a time to speak with me for a one-on-one consult, I'll make a link in the description. Round 3, mortgage insurance. All right, so listen up because this is where the real money may be. With a conventional loan, you're generally paying private mortgage insurance if you put down less than 20%. But here's the important part. Conventional private mortgage insurance can eventually be removed once you meet the applicable equity and loan requirements. Once that mortgage insurance goes away, your monthly payment could drop, right? FHA, however, works differently. With an FHA loan, there's an upfront mortgage insurance premium. That premium is currently calculated at a percentage of the base loan amount and is commonly financed into the loan. You'll pay an annual mortgage insurance premium that's collected monthly as a part of your mortgage payment as well. And here's the kicker. When you use a minimum FHA down payment, that monthly mortgage insurance will generally remain for the life of the loan. No bueno, okay? So it doesn't simply fall off, right, when you reach 20% equity like a conventional loan. The typical way out of it later would be to refinance into another loan type, all right? Assuming the numbers and market conditions make sense at that time, of course. So FHA may make it easier or more affordable to get through the front door, but conventional may be the less expensive long-term option if your credit profile supports it, all right? That's often the real tiebreaker. Round 4, right? The property itself. The type and condition of the home can actually play or influence the decision. FHA appraisals include minimum property standards related to safety, security, and structural soundness. Things like peeling paint on certain older homes, missing handrails, broken windows, or exposed wiring, or the health or safety concerns may be flagged on an FHA appraisal. Now, that doesn't mean that the property needs to be perfect, but certain problems may need to be repaired before the loan can close. Conventional financing can sometimes be a little bit more flexible when it comes to minor repairs or condition issues on the appraisal. And in a competitive market, some listing agents and sellers may view conventional offers as an easier or less likely to involve appraisal repairs, all right? Is that always fair? No. But is it something that should be understood before writing an offer? Yes. All right, so here's Jimmy V's, all right, simple direction and framework, right? You may lean toward FHA if your credit is bruised, your score is on the lower end, or you need a more forgiving path toward home ownership. You may lean towards conventional if right? Your credit is solid, your conventional pricing is competitive, and you want the opportunity to eventually remove your private mortgage insurance. But here's the most important part. Have your lender run both options side by side, and you get to make an informed decision and not just talk about interest rates, right? Ask to see what the total monthly payment is and the estimated cash needed at closing, all right? The mortgage insurance and the estimated long-term costs of each option. Get it on paper, because the lowest rate doesn't always mean the lower payment, and your lower down payment does not automatically make the loan a better deal. And if your loan officer won't clearly show you both options, you need a new loan officer. Real talk. And one more thing, if you, or in certain situations your spouse, served in the United States military, stop right there, all right? Pause the entire conversation. You may have a third option that you could beat both FHA and conventional financing, the VA loan, all right? No down payment requirement, no monthly mortgage insurance, and an extremely competitive financing terms. That is a completely different conversation. And fortunately for you, I've made quite a few videos about that as well. Check out the rest of my channel. So there you have it, conventional versus FHA, mortgages made simple. Neither option wins every time. The right answer depends on your credit, all right? Your available cash, the property, the mortgage insurance, and how long you expect to keep the loan. Drop your situation in the comments and I will make sure to point you in the right direction. And if you feel like I've earned it, show some love. Click the like button, subscribe for more straightforward mortgage education. And if you'd like to talk through your options one-on-one, use the consult link in the bio. Thanks for watching.